Hi, everybody. Dale Pinkert here from TradeGateHub.com. And what a great guest we have today, David Morgan of the Morgan Report. Welcome, David, to TradeGate Hub. Pleasure to have you.
Well, Dale, it's great. It's been too long. It was really a lot of fun the last time we were together. I'm looking forward
Yeah,
to it.
we've known each other for years. And I want to bring something up, David, that probably a lot of people don't know. And I found it unusual, actually, gave you more credibility with me that most people that are precious metal, hard money people are always bullish. It's always time to be in the market. It's always time to be long. I remember getting a hold of you and trying to set up another time for an interview in the future. And you said to me, Dale, I'm not expecting much from silver over the next 6 months to a year or so, but in 20 whatever year, then I think things are going to begin to heat up again. And I go, wow, someone who is in the business that actually is market sensitive to it not being the best time to promote it. And not that it wouldn't be a great time to promote it for you, because it's always a good time to promote, right? And
I
get
know for a
subscribers.
business, for my business, yeah, promote, over promote,
Yeah.
embellish,
Yeah.
enthuse, yeah, now,
So
right,
you've had a feeling there wasn't going to be much going on and you weren't going to push it.
right.
So to me, that differentiates you from other hard money guys that I've talked to over the last decade. And but now, David, where Larry Williams says, we have to live in the future.
Yeah,
So living in the future, what a wild 2 weeks in precious metals. Last week, a week ago, people were writing off silver as dead. It was going to go to $14 because it took out the prior low. And then we ended up breaking out after diverging on the weekly, and put in a
right.
very good week last week. This week, under pressure because of this. So who would have thought we would have had a great move like this in silver, only for the following week for gold to put in a major breakdown?
Right.
So I'm sure a lot of people are confused about this, David. How do you reconcile the two? And I know you believe that this silver move that is embryonic is only just beginning.
Yeah, well, great question, and thanks for putting me on the spot, and I'm glad you did, because when
Okay.
I traded commodities for a living and had, well, I guess my third or fourth broker, this guy was good. And he taught me a lot. And he was a hard money trader. He traded everything, and he retired at 30. His passion was like opera or something. But he just made all the money he wanted to make. But the first thing he told me was whites lead the yellow. And what?
Okay.
Because everyone's like gold leads, gold leads. Well, after 40 years more experience from that date till now, I'd say it alternates back and forth. But on your major moves, silver will make the low first and then gold. How do you like those potatoes? So
Yeah.
what we're
Well,
seeing right
yeah,
now is that the gold silver ratio has declined, meaning
there it
we're good.
is.
So is that correct or incorrect remains to be determined. Look, I'd love to trade, for 2 weeks, get out and retire. I wouldn't be happy retiring. The point is, it's a probability game. It's a skill game. The hardest thing about commodities trading is to know itself to be true. When you're wrong, promptly admit it. I'm not wrong very long when in the futures market. If I'm wrong, I'm out. And if I don't know, when in doubt, stay out. But all I'm
Exactly.
saying, Dale, is the way I see it, the setup, it's a classic to me with all these years. We're near a bottom. Now, gold could waterfall down 3 more times and silver kind of goes sideways to slightly down where the gold silver ratio improves even further. And that would, in my perspective, that would further my case.
You
That
know,
silver's leading gold. It's staying tougher than gold. And
and
that's a good sign.
yeah, and about a week before, there were people writing about backwardation in the futures market. So backwardation means that the front month is at a higher price than the deferred months because there's immediate demand, and that will pay a premium for now and think that maybe that premium might dissipate later. But it's normally it's a very bullish commodity setup, contango. when you have backwardation rather than a carrying charge market, which is a normal market. So you've been talking about what's been happening in the physical market, and are you a believer that there's a paper conspiracy, just like the spoofing in gold, that there are more paper shorts than if they had to deliver, they wouldn't be able to deliver, and that sets up another nickel situation?
It's basically yes, and I'll answer that. It's a question I get asked a lot, and we just finished the silver symposium here in Spokane. We had a very lot of the silver, people, from the professionals like CPM Group, some from the exchange, to commentators, and then I guess someone like me that I would consider an analyst, but you can call me whatever you want. And I gave the keynote speech, and I thought, I'm going to get hounded on this all day long, so I'm going to say it in the open forum. And what I said was, my perspective on the manipulation is this: you cannot manipulate the long-term trend in a market. However, within that trend, you can certainly mess around with it a great deal. And they go, if you want to know the full impact of what I think, it's in writing. It's in my book, The Silver Manifesto. There's a whole chapter on the silver manipulation and fractional reserve bullion banking. Did you hear that? Fractional reserve bullion banking. I know you do.
Right.
For our audience. I know your audience is very sophisticated compared to some that I speak to at other places. But regardless, the Sharpe's ratio gives you beyond a shadow of a doubt that it is not a random walk. And that was brought to my attention by Adrian Douglas, who passed away of cancer many years ago. He's an oil guy, but he's a very good technical guy and really knew the math behind some of this stuff, and brought it to my attention. And of course,
David, that's so great that you bring up Adrian, because guys like us that I'm on both sides of the mic, right? And I meet people like you on this side of the mic, and I've learned so much from being a host and interviewing people that it's become part of my intelligence gathering. I love to provide great content to people, but smart people make you smarter. I say, keep an open mind. That'll keep your account open.
I love it, Dale. I couldn't agree more. And I don't do as many podcasts as the host as I probably could, but I do quite a bit. And
you could be by Mike, Dave. You could be by on the microphone.
Yeah.
You could go either way on the mic. I believe that.
First time went over my head. Yeah.
I know. Okay. I say that about myself. So all of these factors that you're talking about in silver, it never really got the run that people have been looking for a long time. And something else you'll remember, Dave, I want your comment on it. I hadn't have thought about this for, I don't know, 50 years, is that, remember at the Board of Trade, they traded silver, and they also, and there was this relationship between soybeans and silver.
Okay, beans in the teens, baby. Yep.
Yeah. So I'm watching it, and the beans still have a pretty bullish setup. I mean, they're when we knew beans in the teens, seemed impossible. Now it's an everyday occurrence. But I think you could, if as a silver trader, you could pay attention to the beans. They have similar formations. The prices won't be right, but it's amazing how you could get flat. I hadn't thought about that for a long time until this recent move in silver, but just something else for silver traders to pay attention to.
Well, taking you on, not being confrontational, I said we've never had the move we expected. And I take a little umbrage with that, Dale. I'll just say I think we had the precursor move in 2010 to 2011. If you go back that far, you don't have to. But we did have a run. In fact, I got a lot of people that quit the service because there was a channel formation running, I forget, I have to look at the chart, but several months around the $19 level in 2010. And the channel formations are pretty easy to trade, and the longer they go, the bigger the breakout. So we had a handle around 19.
Yeah.
And once it broke above 19, I went long. And it was a great run to about 26 or so. And then I got out. So I had about a $7 move on a leveraged account. I was pretty happy, especially,
Okay.
first day I was in the profit. You don't have that very often in the futures market. So
Immediate gratification. Yeah.
yeah. So I
ever take half profits on positions and
yeah, I
then
lock up a stop, but a real wide one, because
yeah.
I'm a little bit greedy, not too greedy. The markets will teach you a lot. Don't be too greedy, but So at the time I got exited, the fundamentals changed because it was QE2. Now all the old schools, and I'll put you in that class, Dale, always thought money supply was, the cause of inflation. And in the long term, it really is. But rather get into that argument. At the time, when QE2 was announced, everyone's thinking, oh boy, here comes the inflation. What's the best inflation hedge on the planet? It's called silver. So I got right back in. So I forget if I got in exactly, but it's very close. So I got in at 19, out at 26, back at say 26, and rode it all the way up to that big candle and called the top 3 days before it actually topped. So
What
I've
a
always
fond
been taught
memory.
to sell in the strength.
Yeah.
And you sell in
Yeah.
the strength. You
Yeah.
don't want to get too greedy. You do not want to call the top. Because if you call the top, especially in a market like silver that has a propensity to do nothing, and then go rocket ship, you want to hold on to that rocket ship and at some point let go of that rocket ship. So I put out a sell signal to my paid subscribers first. And then I think it was a few days later, I got on an interview and I told people, I'm out. I got out of my trading positions. I didn't get out of all of my positions. And
right.
looking
You're
back,
leveraged.
Dale, I probably should have got out of all my positions and waited 10 years and gotten back in the market.
Yeah, isn't that amazing? I mean, you called the top that's been in place for 12 years now.
Yeah.
11, 12 years.
So a lot of people,
but
not a
now
lot.
let's live in the future here. So
yeah, let's go to the future. But I just had to point that out. I just want to also point out I had a few people. One was a professor, I won't give his name, well known on the time as a financial talking head. And he wrote me, said, I'm done, man, because that trade finished me off. I'm retiring 10 years early. Thank you very much. Goodbye.
Nice. What did we have a dollar bear market during this time? Because I think that's also something putting a lid on the market. I mean, I could go back to the dollar, but
You
it's my
can't. What I
belief.
do know from memory is when I started the Financial Sense News Hour, and that was in the early 2000s, the dollar index was at 120. And I kept talking about the dollar coming down. Of course, it went from 120 to 100 in a fairly short order. That I know from memory. As far as the
Okay, well, here you go. It wasn't a tremendous bear market, but
yeah.
into the 11 high in silver, the dollar was pretty cheap.
Yeah.
Okay, so I mean that was a major bottom in the dollar all back at 72, and now look at it. So what we need here is some type of dollar top. I think we're close.
Looks like it.
Can you think of any? I mean, there are many fundamental reasons we've talked about for decades about why the dollar should not be a bull market. You talk about deficits and the fiscal state of the U.S., which has never been worse. It probably couldn't handle a Volcker regime. Probably couldn't handle more than 5% rates.
Yeah.
Europe, everyone loves the dollar because you can't find one reason to want to be in the euro. What do you think could be a catalyst for a shift in trend in the dollar?
This is my take and many others, and you've already really alluded to it, maybe not even knowing so. It's trust, it's faith.
Okay.
I mean, that's what has to break. So what could need or needs to happen, I'll say, is there is some mismatch somewhere. Like when Barings Bank went down, whatever that's been 30 years ago.
Yeah.
My little hard money head goes, oh man, this is it. This is the beginning of the end. Nope, didn't happen. Lehman went. All these banks, these big major money center banks are trading houses. I mean, what was the character's name that was in the futures market and was a senator or something? I forget his name. Anyway, there's been all these events. So the older I got, the more I realized.
Oh, John Corzine.
Oh, yeah. Thank you.
Okay.
And, all
Takes me
this
10
stuff.
seconds nowadays. I usually it'd be like this, but I have a delayed fuse now, bro. Go ahead.
So it's going to be an event or two events where there's a trade imbalance, and it's subtly happening, as we know, all the things you mentioned, Dale, and as it progresses in time, that alone could do it. But I think a real catalyst would be some type of mismatch where there's trust in the market. So and so is supposed to settle with a major money center bank or a major brokerage house or maybe a trade somewhere. And oh no, we're not taking dollars, okay, which is already happening in Russia. We want you to be in rubles, and more of that. So everybody that you mentioned, anyone in South America that's seen hyperinflation is holding US dollar notes. I mean, they're holding the physical pieces of paper because they trust them more than anything else.
Right.
And that's pretty pervasive around the world, especially in third world countries. So if there's something in that domain that loses faith, then that's the beginning of the end.
Okay, so could be. I know people have been worried about the European banks because they didn't clean up their balance sheets like the U.S. banks, and pointing towards some frailties in the Southern Europe Italian banking system. Um, Even the Germans, which would probably like to have the Deutschmark back rather than the euro, they're under a lot of pressure. Last time we here in the U.S. with our derivatives in the housing market lit the fuse. A lot of people thinking it's going to start in Europe.
Yeah, well, I've read, and I forget where, that pretty solid information that the big collapse, the world collapse, starts in Germany, moves to Japan, and then it takes on everybody else. I mean, all these banks are interconnected, as you well know, and so that's why when the Lehman event happened, the Fed rushed in so quickly because it wanted to stop those dominoes from falling and taking out the whole system.
You bring up the Fed, David, and why do they want to wreck the economy? Even though they already I know you could say they wrecked it by central planning and being too easy for too long, but um, there are definitely cracks in growth across the board, and pressure in equities. Bond market's been under a ton of pressure for a long time. What's behind it? Is it to get the new coin, the digital coin, CB, whatever,
DC, yeah.
DC in there?
Yeah, well, asking why it goes to intent and what is their intent, and the answer is I don't know, but I will give you some thoughts about it, Dale. I see it maybe differently than some. There's a huge disconnect between the physical economy and the financial markets. It's been that way for a long time.
Yeah.
So if you were going to save the dollar and not go to a CBDC, what would you do? You do what Volcker did, basically. They wouldn't do it all at once like Volcker. You could wreck the markets. And I agree with you, Dale. If we go to 5%, that's probably all the markets can handle. But you would keep ratcheting up interest rates so that the dollar is yielding more. And truly, it needs to yield as much as the inflation rate to be par. Otherwise, these bonds are worthless, really. So it could be, and I say could, not would be, a way to delay or keep the dollar in place. That's the only way it's going to happen. I mean, the idea of compound interest is a ruse. It doesn't work. I mean, if God gave Jesus 1 penny and it compounded at 2% for 2,000 years, it would be equivalent to 6 planet Earths. So it doesn't work. And this is why, if you go back in the Bible, you had a Jubilee about every 50 years, because at that point you could reset and start this compound interest thing all over again. But it doesn't work in the long run. And this is why, some of the major banks that were there, and there aren't many, but in the 1700s that still exist, at least in theory, think of what they're worth, based on, compound
Right.
interest. So I think it's a delay tactic. I think the Fed knows the new system is inevitable, but they want to be the kingpin or at least a major player, and they're not ready. So what would you do if you're not ready? You keep the dollar as strong as you possibly could. The only way to do that now is to be tough, keep raising interest rates, put the hurt on the people. I mean, it's so upsetting to me being a hard money guy, because the power of money is so important to all of our lives. We all have to eat. We all have to, in this society worldwide, we have to earn money to be able to survive. And when someone controls it and controls the price of it, in a free market, the market should determine what the price of money is, and we don't. The Fed does. Oh yeah, they set the discount window, and the market can take over, as you know, but
Yeah,
it hasn't really done its job in a long time. Although, as you show, the bond market really is starting to sniff this out and say, look, this isn't good.
you
These
know, you
dollars.
brought up, you brought up the pain of, the man in the street. And I talked to this gentleman, Danny Blanchflower, who used to be an MP at the BOE, who was screaming in a weight that they needed to cut, and they didn't. And when I talked to him, he said that for every point that we shave off of the, or CPI goes up, and compared to if unemployment goes up at the same time to make it go down, it's 10 times more painful for the person than having inflation go up 1/10.
Glad
So
you brought that up.
yeah, yeah. So
Sorry if I cut you off. There's a line in The Big Short that Brad Pitt says. I forget the exact thing, but he said something similar, that for every 1%, so many people die. That's like an eye opener. I mean, but these bankers, from my studied view, don't really give a shit about us. They're in their own elite class, and it's about them and not us. And that's why, again, I've been a hard money advocate for so long, because, if we were on a true people standard, meaning, we, the people, determine what money was and not the bankers, it would be a different system. There'd be problems. It's human nature to, have arguments and discuss, problems, but not the kind that we're in now. We're in a time that's never been in financial history, where the reserve currency of the world is failing, and failing rapidly.
So with the end of the Roman Empire, did they have bail-ins at their
Yeah,
banks?
no,
David,
they didn't, but they had similar political class. I mean, they basically stole everything they could at the top.
right.
So it reminds me of the movie The Titanic, when they're leaving the ship and the guy's got a trunk full of money, and he's trying to give the kid the money to get on the boat, on the lifeboat. It's like, I don't want that. It's not doing me.
Yeah, there was a story, David, about a guy who knew he was going to pass away, and he didn't want to leave anything to his kids or anything. And an angel came and told him he was going to die, and said, well, can I bring one suitcase? And the angel says, no, you can't bring anything. And he said, please make a plea for me to bring one suitcase. The angel came back, said he could. So he liquidated his stocks and bonds and real estate, went out and bought a kilo bars of gold. So when he passed away, he was at the gate. St. Peter goes, you can't bring that in. He said, oh, yes, I prearranged this. He goes, well, okay, let me see what you have in there. And he opens up the suitcase. And St. Peter says, why did you bring concrete?
I
Huh?
love that joke. I never heard it, but it makes perfect sense. Yeah.
Anyway, so, while we're here on this material plane, what are you telling people as far as a blend to take advantage of what may happen in metals, especially silver? And you know what? Platinum is backing up the claim. It's white, like you were saying,
Yeah.
David. And I believe palladium's white, or maybe
Yeah.
it's grayer. But platinum is also not making new lows. So,
Right.
that's another piece of the puzzle. How are you advising your subscribers? And I want people to see the Morgan report, as far as a blend of physical and perhaps some leverage things. I see you also talk about miners. What do you think the right blend would be with a portion of people's portfolio?
No, thank you for that question. I don't get it often. So when someone joins a premium service, which is the paid service, the first thing they should do is watch the video and read how to use the Morgan report. And then there I go into how much physical you need based on your age and your risk tolerance.
Okay.
Once that's established, then you go into the portfolio, and there's risk analysis there. Big money goes to the big companies. It's called the top tier in the model portfolio that we use. middle money and what we call the mid tier. And speculations are rank speculations, and that's money you can afford to lose. As far as like ETF trading or whatever, or futures trading, I don't do it that often, but I do it in front of them like we're doing with charts. And
Yeah.
so I will make that, take a chart out like I did way back. I talked about it. Say, here's a channel formation. Once silver gets above 19, I will, go long. And I told, all my paid people, that's exactly what I was doing. I also said, hey, I got out, but I'm wrong. This QE2 has been announced. I'm getting right back in. And then I called the top. And like I said, 2020 hindsight, it did happen. It can be verified, but we haven't had those kind of setups again for a long time. And here we are with all these fundamental facts with backwardation, lease rates increasing, commitment of traders being more favorable than ever. And silver is not making a new low, although it went below the 1850 that I called as the low. So wrong again, folks, by some pennies so far.
Okay, you know what, David? That's a great point. So there are false starts for tops and bottoms in the market. And I got long here too. And I thought this might be the one that's going to carry us above, 28. But you know what? If you know how to manage money and you got long silver here, you shouldn't have lost money.
It was a
You should
relief
have,
rally and you made some
yeah,
money. Sorry to interrupt, but yeah.
right. So then you probe and protect again here, and you see a wedge, it's a reversal formation, you go for it. So, people think that, if you don't call or get long at the bottom, that you're not a good trader. But good traders are wrong at times. But if you're wrong and you still make money, how much better can it get at being wrong
Exactly.
about
Right.
a major low?
Yeah.
So this, oh sure, I believe everything can happen in the markets. Could this be another false start and gold goes to 1400 and rates jack up and we make one more low? It's possible. I don't think it's probable though. And I think
Agreed.
don't you think it proved it with what gold did? If silver was ever going to crash again, um, it'd be, a lot lower. So far, I think we've only retraced about 38%
Yeah.
here of this whole move. So,
Well, you got to remember that the dollar's inversely correlated to
yeah,
gold, and particularly gold is inversely correlated to the stock market. And so if the market, of course, now I know it's been falling off, but go back a few months. I mean, if the market's making new highs, that doesn't really imply gold will be making new lows, but it
right.
does imply that gold wouldn't be that strong. And it's actually on that basis, you understand what I just said. I know you do, Dale. Gold's done actually fairly well. And from a long-term perspective, it has preserved wealth if you bought in right. If you bought in when I did and started the service back in 2000 or 99, actually, you would have a CAGR of 10% in gold. Compounded annual growth rate, that old compound interest I just talked about, 10% per year for 22 years. That's not a bad return. From those starting points, it's done better than the S&P 500. So, I am an investor / trader. Most people can't do both, but the bulk of, I bought everything I could when silver was on sale. When was it on sale? Same time Warren Buffett bought it. Same
Right.
time Bill Gates bought it.
$5, $6.
Yeah. I mean,
Yeah.
really low.
And you know what? I sold it and I couldn't give it away.
Yeah.
So that was another sign. So, David, I want to leave with a little ray of hope, that there is a possibility that the euro either has bottomed or there's one more break. And I say that because this was a CPI day right here, buddy.
Yeah.
And this was a CPI day right here in S&Ps, which you've had follow through to the downside. So we've had risk off, which should be bullish a dollar. We've had gold cracking, and just a little hint of hope is that normally under those circumstances, euro would already be at 98. So just a little something for food for thought for the weekend, because you gave us food for thought for a whole cycle coming up here, David.
Thank you.
Really, really appreciate being with you. I know I talk too much and I interrupt too much, but it's only because I'm excited to communicate to the public what I'm bringing to them, and that's your knowledge. And we should do this more than every 2 or 3 years.
Yeah, good.
Don't
Well,
you
I
think?
enjoyed it thoroughly as well, Dale. Thank you.
So David Morgan, check out his newsletter, themorganreport.com. Pick up one of David's books. I like this Silver Manifesto. So it's from a patriotic Leninist. Anyway,
I struggle with that name. Actually, it's defined in the book what manifesto.
All right, David, and you know what? There's nothing better than compelling information and a little humor. You
You
know,
betcha. Got
pretty
to keep the
powerful.
humor in today's world.
We do, David. Look, I'm a fan. I'm rooting for you. Keep in touch with me, and I thank you for your giving spirit and sharing your stuff today.
Well, my pleasure. Thank you, Dale.
David Morgan, everybody. Follow him on Twitter at SilverGuru22, and we'll see what happens here with the white stuff. Thanks, David.
You're welcome.
All right. Have a great weekend, everybody.